At this point, I would like to welcome Ken Capron. And Ken, he's a 1979 graduate of USM. He's worked in accounting and finance for Pete, Marwick, Mitchell & Company, and Maine Medical Center, and has consulted in both the private and public sectors. His focus is work with financial institutions and healthcare organizations. In addition to his knowledge as a CPA and a fraud investigator, he has provided guidance to companies in technology planning and implementation. Ken's experience working with large companies and even a small business owner provides him with a unique perspective and understanding of the needs of both. So, Ken, welcome.
Thank you, Brian. I just pushed the button. I'm a wanderer, so if I get in the way of the screen, I apologize. I'm not one who stands behind podiums. I'm absolutely impressed that there are so many people here who want to learn about fraud. This is a somewhat unique field here in Maine, and I don't know if John Saunders is here, but John Saunders teaches a program here at the university, a little bit about fraud, but he's only got 20 students, and that's about as much as he can handle as far as I understand. But, we'll get rid of the technology issues first. Well, let me tell you a little bit about myself. I'm a CPA, worked with Pete, Marwick, Mitchell for a couple years before going into the private sector in healthcare, and somehow found my way to be the director of accounting at Maine Med in the mid-'80s when they were growing from one big corporation to 17 plus smaller subsidiaries, and it was quite a challenging time for us. But then I wanted to do something different, and I ended up setting up a hobby shop for my kids because I wanted very much to be a part of my kids' lives. To make a long story short, I ended up in the Y2K situation being very busy with fixing problems around the state, and actually it was a very prime time for fraud. I don't know how many businesses went through anything to do with Y2K, whether it was bad accounting systems or changes in accounting systems, but it was just a ripe time for fraud, and I suspect, and looking ahead, sequestration is going to be a good excuse for a lot of fraud, and so it's a good time to be talking about this right now. Right now I run the Maine Policy Institute, and two of our major projects are what's called the editorial board, which is every other week at the Portland Library. We actually sit around and talk civilly about issues of the day, and it's just a way to give people a voice. And the other thing I'm very involved in is the Maine Memory Cafe, which is a social gathering once a month, or in some cases twice a month, for people who are on the edge of discovering they may have Alzheimer's or some form of dementia. And I say that that's one of my pet projects because I'm actually an early diagnosed on Alzheimer's disease, and so if I forget names, I apologize, but if I call you "Hey you," it's because I really don't remember your name. But so that's something I have to look forward to. But I do a lot of policy work now. Don't ask me how an accountant goes from being a technology and accounting person to being a policy person. Not a good thing.
Because it's your brilliant education that you got at USM.
I did graduate summa cum laude from USM in '79, and I can't say enough about where that got me. Having been through Dean Findley's programs, and I think there were 8 of us who graduated from USM that year that went to work for Pete Marwick, one of the big 8 accounting firms, and it was a pretty interesting scenario. So what is occupational fraud? What are we going to talk about today? And there's a lot of different definitions. The Supreme Court of Maine has set up 5 criteria, which I won't get into because they're very technical, but basically it's an employee's misuse or misappropriation of an employer's resources or assets for personal gain. And those are 3 separate things. It involves an employer, it involves misappropriation, it involves an employee doing something with assets, and it has to be for personal gain. If it's not for personal gain, it's hard to call it fraud. The Association of Certified Fraud Examiners calls it is the most costly type of fraud in terms of the dollars lost, by victims, but can also be costly in terms of investigative expenses, regulatory actions against those involved, and penalties assessed by the government. But the big cost is the legal cost. And this will factor later into what happens once you discover fraud. What do you do with it? Alan Bachman of the ACFE describes fraud as, in the initial stages, fraud and stupidity look very much alike. No, it's true, because a lot of fraud is covered up when people try to say, well, I just made a stupid mistake, or you know, how was I to know that the books were going to close early this month? You know, I just didn't get my entries in. An investigator who stumbles upon what appears to be a stupid mistake needs to go further. They need to dig further. Stupidity often ends up being cleverly disguised fraud. No question about it. I would say that half of the cases I've worked with, it's just somebody accidentally finds a way to defraud the system and have no clue what they look like when they're trying to do that. And so they become actually obvious. They become blind to their own ambition. There's three basic types of fraud: asset misappropriation, corruption, and financial statement fraud. I've seen a lot of issues around financial statement fraud, and that's something that only accountants should be able to detect. But I have also seen a lot of accountants kind of let some things slide because of a little thing called materiality, and that will come into effect later in the discussion. Wow, this is... All right. When you're looking at fraud, you got to look at both the company that's being defrauded and the perpetrator, the person looking at it. Because there's some companies just wide open for fraud. There's just no question that they leave the doors wide open for the opportunity for somebody to find a way around the systems. Even well-run companies, and I think we saw this with LL Bean and WEX, when a former employee kind of sent them phony vendor bills. I mean, they're well-run, well-managed, have strong internal controls, but they didn't bother to check new vendors as they came on. And so that, you know, somebody sends them an invoice and says, well, I did some contract work for so-and-so. They didn't bother to check that the business had an address or had actually done any work. They just paid the bills. It's that easy sometimes. I've seen that in several places besides Maine. So there has to be an opportunity. The businesses have to have a weakness. And in fact, in Maine, most businesses are small enough to have weaknesses. And so there's got to be a better way. Than you can't have internal controls that dominate your life 24/7. You've got to keep your costs within reason. There has to be incentives. The person who is going to steal the money, who's going to defraud you, has to have some sort of motive to do that. They have to have a financial need. They've got a debt. A big thing that's come in to this state is gambling. Gambling creates usually an uptick in fraud wherever it's located because it creates gambling debts. People want to borrow, buy, steal money to play debts. And the attitude, talking about attitudes and rationalization, it's easier for most people to steal a little bit from your company than it is for them to steal it from your family or friends or relatives or whatever. So your business is a target. And that's not maliciously, that's just that it's easier if I can find a way to get money from my business. That, you know, a business can miss it. I mean, a business has the ability to absorb a few $100s here and a few $100s there. At least that's the rationalization of the fraudster. And they also say, hey, you know, they've got a business has insurance to protect them from this. And I'm sure the insurance folks around the room are saying, yeah, but there's contingencies. If you're relying on your insurance coverage to protect you from fraud, be sure you read the fine print because in most cases it requires you to prosecute the offender. And in most cases, I would say 90% of all fraud cases I've ever dealt with or read about, most people don't get prosecuted. Most people are running out the door with maybe some restitution, but most companies just want to bury it. There are a lot of roadblocks to successful prevention detection of fraud, and some are artificial, some are not, but you've already got, in most businesses here, I'm assuming, you've already got a whole bunch of regulations that you've got compliance people for, and you've got internal controls, you've got bank audits, you've got to worry about, you're already overwhelmed with regulations. The cost to implement internal controls, when I was an auditor, you heard that all the time. You know, is it cost beneficial for me to lock the door at night when it's so much easier to just leave it open? And I'm being facetious, obviously, but it's very difficult to get around the creativity of fraudsters. I mean, these folks, even if they're innocently, and I say that loosely, but even if they're innocently perpetrating fraud, they're just very creative. And to be honest with you, once they start, they find it very hard to resist the second time and the third time and the fourth time. Once it starts, it's going to go. And most companies here would have a great deal of concern about negative publicity. And I know we've got some people from Vero Dana here today. Are they? But I mean, there was an issue where a senior partner took some money, and the court said, well, shouldn't you folks have noticed? Well, that really puts some question into the eyes of your clients, and it just, you know, the media gets hold of it, and they just love to make an issue of big companies or successful companies when they screw up. So you may not want it to become public that somebody has perpetrated the fraud, so you may either just fire somebody or you may ignore the episode. And of course, your confidence in the community, your community relation is torn apart. There's also the possibility that unless you can really prove that there's been fraud, if you accuse somebody, you could be sued. If they know you don't have proof, if they're sitting on the proof, and you accuse them, you know, they have a lot of recourse to come back at you for damaging their reputation, for defaming them. That's a huge deterrent. Offenders are often one of the things that stops offenders frequently is they become aware of the potential for embarrassing their own family, and I think that's true with a lot of corporate crimes. Is you reach an understanding that, wow, I've done something I shouldn't have done, and now it's going to impact other people besides me. The cost of the investigation, the last one I worked on I charged $250 an hour, and that's not easy money for most businesses, and it takes weeks of work to really uncover a good fraud. So it's very expensive. And I hear this all the time. Well, I didn't have time. I just don't have time. How many of you have extra time in your day you can spend on understanding or looking at whether people are committing fraud? You got enough to take care of your own job. All right, so let's create a better mousetrap. And I just want to say, I mean, all this stuff that I've just said basically can be found in textbooks. On the internet, go to the Association of Certified Fraud Examiners. There's a lot of good literature there. But you can read all the literature you want, and you can put all the internal controls you want in place. Internal controls have almost no impact on fraud. I hate to say, but only about 3% of fraud is caught by internal controls. Even more so, if you're relying on your external auditor to detect fraud, if you look at the engagement letter, that is not part of their audit. They are not there to detect fraud. And in fact, they set what's called materiality limits, which is the amount below which they're not going to look very seriously. They're going to look at everything above, say, $350,000 or $500,000, depending on the size of your company. But they won't look very hard at what amounts below that. And so, if you're hoping that they will, it says specifically in the engagement letter that we are not there to uncover fraud. I think there's maybe 3% is the number I read that of fraud cases that are uncovered by a standard audit. And that's not much. Most cases are uncovered by tips from whistleblowers, a big majority. And so the better mousetrap. It is real critical, in my opinion, if you want to prevent fraud, or at least minimize the impact on your business, to get to know your employees extremely well. You need to know if the janitor is driving a Mercedes. You need to know if your accountant has a gambling addiction. You need to know if your business manager is about to lose their home. You need to know if they've got 2 kids that just went off to college and they're going broke faster than they can work, and they're working 2 or 3 jobs, because although those are probably honest people, and majority of fraudsters, 75% of fraudsters, are long-term trusted employees. So you need to know your people. You need to get down, to the grassroots. And when I was at Maine Med, we had bowling teams, we had volleyball teams, we had softball. We just had a lot of activities where management could get involved with the people that work with them, and it gives you a chance to know, who you're working with. You've got to do that. You've got to know those people, because those are the little things that suddenly grandma gets sick and she didn't have insurance and Medicare only covers X number of dollars and they've got to come up with the money. If they're living on a budget like many people are today with the economy, they're going to look for a way to come up with money. And if they happen to be close to it in your business or close to assets, they're going to rationalize in their mind that it's okay, I will pay it back. A classic example of this, and Betsy told me not to get too political, but classic example of this is a gentleman by the name of Phil Roy, who was the treasurer for the Maine GOP. And then Phil wanted to buy a camper, one of these big, big, heavy travel trailers that it was going to cost him about $15,000, just under that. And he didn't want to borrow it for long term. He knew he could probably pay it back, so he actually took it out of the GOP's checking account, wrote himself a check, bought his trailer with cash, and then figured he'd pay it back without the organization identifying it. Well, unfortunately, somebody caught it. The accountant did not catch it. Their CPA, their audit, did not catch it, believe it or not. So here he is. He's borrowed $15,000. The GOP discovers this and keeps him on as treasurer. But they said, we want the money back. So at the time, Phil was also working with the Western Maine Workforce Board, I believe it was. He was the treasurer for them. So guess how he paid back the $15,000 to the GOP? He took the money from the Workforce Board and transferred it to his account and paid off the GOP. And it wasn't until he got caught at the Workforce Board that he ended up being held accountable anyway, but it was not a serious accountability. He was forced to pay it back. There was no legal implications. There was no ramifications. And in fact, he works for another government agency right now as their treasurer. But this is generally what happens. You will find this recycling of bad decisions or whatever in the small businesses that Maine has, because I don't know why. I can only guess why. So get to know your employees. Do they want to buy a camping trailer? I mean, are they living above their means? I mean, you know what you make, and you know how well you can live. Is there somebody who's, you've got a nice home, but you're not making enough to have a swimming pool and a fancy car or two, or You know, you're not sending your kid off to summer camp every summer and private school in the winter. I mean, if your secretary is doing that, there's something wrong. Unless, of course, she may have a second job. He may have a second job. But you've got to know what is their exact life experience or life situation, and you've got to do that. As I mentioned, with audits, there's this thing called materiality, and you really need to take the time to sit down with the auditor when they're planning the audit, when they do that engagement letter, and say, can you lower that materiality level a little bit? Can you look at transactions 100,000 up, just so we know that we're at least that safe from fraud? It'll cost you more, and they may say they don't feel they need to, but you can ask them to make sure they look at every transaction over a certain amount. That's rarely done, but you have to let them know that you have concerns, if you have concerns about fraud, because they will change their practices. But in addition to that, if you've got anybody inside who can take the time to sit down and look at any invoice that's over, say, $25,000, and it's up to you what you consider material, what you're willing to lose. I mean, if you as a company have decided that anything under $25,000 is no big deal, could you give me a call, because I've got to send you an invoice for $25,000 or $24,999. But so that's work with your auditors. Let them know what your concerns are, because otherwise you're just going to do a simple mathematical calculation of materiality. And I think the most important thing that I can suggest to you is a serious, trustable whistleblower protection policy, protection plan. And that's some people consider whistleblower to be a nasty thing, because we're actually, one of the books that I would recommend is a book called Lie Spotting. And it's about detecting lies and when somebody's telling you something less than the full truth. And we, as a species, we tend to lie, you're not going to like this, about 12 times an hour. No, little white lies. We're not going up and saying, hey, I just bought my own baseball field. No, you're talking about little white lies where you don't want to hurt somebody's feelings or you whatever. We're programmed from a very early age not to squeal on our neighbor. Squealing is absolutely verboten in school. I mean, anybody who remembers the school days, if you squealed, you were outcast. So what we need nowadays in corporate settings is one person or a couple of people that an employee can go to express concerns. Somebody who is going to listen to that concern, acknowledge that concern, and promise to get back to them after they've looked into it further. You've got to have that outlet for that person, because if you're afraid of being defrauded at all, you've got to give people who are frontline people who see it every day. And I'll guarantee you, in any case of fraud, there's at least one other person who's aware. In every case. And I mean, even the big cases. In Bernie Madoff's case, there were lots of people who knew what was going on. But they were afraid of losing their job. If they came forward, well, there was an accountant who came forward and kind of blew the whistle a little bit, but she was immediately ostracized and treated like dirt. And that's the worst thing that can happen, is when whistleblowers are treated like dirt, you basically establish a policy in the company that says, don't ask, don't tell, just take. You don't want that corporate culture that says it's okay to, if you see something, just bury your head. It's not your job. Don't worry about it. I don't want to know. And I'll guarantee you, you will want to know when the bank comes looking for your money, because you don't have it anymore. So you basically need a clear policy that says if you think something's happening that shouldn't be happening, designate a person who is truly independent, who is not going to impact that person's job, who's not going to go to your boss and say, well, you got a troublemaker there. You need somebody who's trustworthy, and it may be even somebody outside the corporation. It may be a lawyer, or it may be a mediator, it may be any kind of professional who hasn't got a foot in the pie. Somebody who doesn't have the ability to retaliate. Because what happens in almost every case I've ever looked at of whistleblowers, there has been a significant amount of retaliation, all with the intent of discouraging that person from coming forward and saying what they know. Now, obviously, sometimes people come forward and they say, well, you know, my boss went home with a pen in his pocket. Not a big deal, right? But let somebody else make that determination. Don't let that person walk around with that information in their pocket and begrudging it and wishing that everybody was treated fairly, and how come this person is treated that way and this person's treated that way? How come I'm being retaliated against? How come I'm being harassed by other people because I reported Joe for stealing paper from the office? And I'm only using paper and pens as an example, because what I'm really talking about is lots of dollars in either physical assets or financial assets, or things like reputations. I mean, reputations, I would hope everybody values their corporate reputation here as much, if not more, than their own cash. I mean, corporate reputations are what makes you or breaks you. Another thing that I added at the end here was to always give the offenders a way to save face. A lot of people will come clean if they made a mistake, they got caught up in it. Once it started, they couldn't stop. It was too easy. They probably want to stop. They probably don't want to take any more money, and they really would like to make up for the past. If they have a way to do that, a safe way to do it, they will most likely take that path. They will follow the safe path. There's, you know, the old saying, if it sounds too good to be true, almost every time you hear that, you dismiss it. We all say it. If it sounds too good to be true, it probably is. But a lot of times we say that, but then we just go ahead and do it anyways. I mean, you hear about older people who are getting defrauded through emails, or, you know, some guy in Nigeria getting very rich because people ignore their own instincts. We've been raised to ignore certain instincts. We need to pay attention to those instincts at every point in the business process. If you sense something's not right, if it just doesn't add up, I mean, and I'll tell you a joke in just a minute, but if it doesn't make sense, be suspicious at least. If what somebody's telling you, if you've got an insurance client, for example, who's telling you that they've got lots of this and lots of that, and so, you know, you write a big insurance policy and come to find out they had none of it, you know, they've defrauded you, but and especially if they burned down their building or something like that, and they said it had $500,000 worth of merchandise inside and only had $20,000, that's a huge loss on you, because you didn't go and do your due diligence and see if they actually had the $500,000 of inventory or not. So give some serious consideration anytime you think that things just don't add up. On the surface, I'm not saying wait, I'm saying immediately. If you just kind of get that weird sense, because that's the sense in the first comment up here. A good fraud investigator has a nose for fraud. They have an investigative intuition that helps them detect and solve financial crimes. That is the hardest thing for me to explain to people who don't have that instinct. People who have the instinct understand it very well. But it is not something that is teachable. It is something that it can be learned from experiences, because once you've run across it a couple times, it sinks in. One other piece of advice, and the thing I say to everybody is, it's not what people say or do, it's what people don't say or don't do. There's a joke I learned early on in accounting. I probably shouldn't have told you it was a joke, but the CEO comes up with a problem that he's not quite sure what to do about. And so he calls in his engineering manager and he says, look, how much is 2 plus 2? Engineering manager says, and I'll go back, do some calculations, do some sketches, and I'll give you an answer later on. CEO calls in the marketing director. How much is 2 plus 2? And the marketing director says, well, I don't know what it is, but we can sell it. We definitely can sell it. So finally, the CEO calls in his CFO, his accountant. He says, you must know how much is 2 plus 2. And the accountant thinks for a minute. He says, well, how much do you want it to be? But that's actually too often too true, because accountants are like everybody else. We don't want to lose our jobs. And I have seen firsthand experience accountants who will make it whatever you want it to be. I had the chance around Y2K to work at the hospital in Greenville, Maine. And they had blown the Y2K thing. They hadn't done their transition of software, so they had gone from a computerized system back into the dark ages of a manual system. And once a month they had to calculate their Medicare allowances and their Medicaid allowances, something that's particular to healthcare. And the gentleman who was there was not a person who was experienced in that. So he said, well, what do you want the bottom line to be? And so he would adjust the financial statement so that the bottom line came out to what the CEO wanted, and it was all buried in this contractual allowance. Seriously. And this was, oddly enough, I'm sure people don't know this, but in 2000, Eastern Maine Healthcare gave $5 million to Charles Dean Hospital in Greenville to get their act together and get back on healthy ground. 2 years later, they had spent $5 million and were no better off than... So anyway, I'm not saying that was fraud, but the money disappeared. They didn't have anything to show for it, and I still don't have any clue what happened. But it's that line between what appears to be just plain stupidity and fraud. There are a lot of cases where it just looks like it's too stupid to be true. And you really have to look deeper to see if that's actually fraud or just plain incompetence. In the case of the place in Greenville, I'm pretty sure that was just pure incompetence, but they didn't do anything about it. That gets me to another point. And I had done up a huge Excel sheet on all the fraud cases in Maine over the past year and a half, 2 years. And one thing really stuck out that was disconcerting. The average sentence, well, let me back up, only about 15% of cases actually ever get to court, and the average sentence for a fraudster is 2 years. So the moral of that story is, if you can make it for enough money and stash the money away, go do your 2 years and take off to Florida afterwards. I mean, that's the message that our government, our court system is giving to fraudsters. There's really no big penalty to fraud. I mean, look at what happened with the Turnpike, where the executive there was, and I'll guarantee you that people inside the Turnpike knew what was going on, that this guy was spending money that wasn't his. And, we spent a lot of money as taxpayers to prosecute the case, and he's probably going to be out in 2 or 3 years. He's probably not going to have, he'll probably never pay off the restitution, probably never feel really punished. He'll probably be out on the speaker circuit in a couple of years making money for that. So the penalty just doesn't match the crime anymore. And I know we're overloaded in the court system, but that's one of my pet peeves. If we don't make the penalty substantial enough, people are just going to do it. Yeah, I've pretty much covered that. I'd be glad to take questions, but I've actually lived through, from start to finish, a fraud case here in Maine, and I'll just take a few seconds to describe it. I became the controller of this organization in October, and I had to have the budget and financial statements ready within 15 days in order for the board to review the budget. And I was in the middle, I transitioned from Excel to Lotus and back, and I don't know if you folks even remember Lotus. It's been a while, yeah. I see a few heads out there shaking. And I ran into this whole category of expenses that weren't on the balance sheet. That weren't on the income statement. So I went to the boss and I said, what's unique about these expenses? Well, we don't show the board those expenses. Okay, we don't show the board. Okay, so I went ahead, being a good soldier, and I made up the budget and the financial statements for the board meeting coming up, and sure enough, those expenses were off to the side. I was still curious about why that was, and board didn't bat an eyelash. Nothing was said at the board. Apparently nothing had ever been said at the board about that. And they passed a budget, and everything was fine. So then, as time progressed and I got more familiar with things, and I got to realize what those expenses were, those were expenses that were funded by a grant, but they were already in the general fund expenses. So they were being recovered through the operating budget, which was paid by taxpayers, and being funded by a grant over here. So they're being funded from two sources, from taxpayers directly and from grants. So they're double dipping. And so then the question became, well, what do you do with that? And the first thing you do is, if you're a professional, is you go see a lawyer, because it's your reputation on the line. And the lawyer will tell you, if you're going to be a whistleblower, you take your life into your own hands. And you do. And I did what he suggested, and that is you follow the chain of command. And I did. And I went and talked to my boss in more detail that these numbers shouldn't be, we're double billing. And, oh, no, we're not. That's just the way that we do things in this business, in this industry. It's different from what you've seen elsewhere. Now, I don't know how many accountants are in this room, but that's just BS. Okay? I mean, no, I understand accounting. I didn't get my degree for nothing. So that was one rationalization. And that kept progressing. I would approach it a second time, and another rationalization. I ended up on probation. Okay. Now what? So I went back to my lawyer, and he said, well, then what you have to do is you have to talk to the board members. You have to talk to somebody on the board. Who's in charge of the board? And I won't tell names, but I talked to two different board members. One was from Westbrook, one was from Portland. The one from Westbrook I talked with over the phone. The one from Portland I actually sat down and had breakfast with. And I explained the situation. And the board member looked at me straight in the eyes. And he said, Ken, can I see it on the financial statements? I said, no, that information never gets to you at the board. If I can't see it on the financial statements, I don't want to know about it. This is a board member. Well, the guy from Westbrook didn't have any, he said, well, that's, your general manager knows what she's doing, so I'm not going to, who am I to question that? You're just an accountant. I can't tell you how many times a board has just sort of ignored the obvious answers, the obvious questions. So when I talk about whistleblowers, you've got to have somebody beyond the board, somebody who's truly not subject to management or board influence or control, for somebody to go and blow the whistle to, because at that point, I did have a choice. According to my lawyer, I could have filed a False Claims Act, which is a special type of fraud, which can actually be lucrative to those who file false claims, who report false claims. Or I could just shut up. So I've got a briefcase at home that has a beautiful set of work papers proving everything that happened. It's just sitting there because I have no one else to take it to. And it's been sitting there since '99. So that gives you a sense that the fraud, the corruption can perpetrate from the lowest clerk to the highest member of the board. And the only way I know to even tap into detecting that kind of fraud or reporting it or making sure it doesn't happen is to make sure there's somebody you can go to report it who knows what to do with that information. I since have found out that I probably could have gone to the Attorney General, but the impact on me would have been being blacklisted basically for the rest of my career. So I chose not to destroy my career and to just move on, and so I left, obviously. But that's one real-life situation, and I've seen a lot of situations, some that are fraud, some that aren't. How are we doing on time? Wow. So let me open it up to questions, because I could go on forever. With all the cases I've seen, I sound very discouraging, and I don't want to depress everybody, but to me, it's a nightmare job. I mean, I don't go into a fraud investigation lightly, because it is a very negative experience for the most part. People know what you're there for. They don't like you there. You are immediately an enemy. You really are ostracized. And when a job is done, you're basically, you're sitting at home in your living room waiting for the next one, or we're looking for the next one. And so it gets to really burns you out fairly quickly. So you don't do too many. You just don't. But I can honestly say that I never saw any fraud at Maine Med or at Wentworth Douglas Hospital in Dover, New Hampshire, or at Pete Marwick. But I will say that one of my mentors at Pete Marwick is now in jail for fraud. Yeah, a guy I trusted immensely is in jail for fraud for a large SEC-regulated company in New Hampshire. And, that's discouraging. And the tax partner I worked with has actually been debarred in 3 states and has served time in jail. So he used to do the DeCoster Egg Farms tax return. Hint, hint. So, questions, please. Theo.
So, Ken, I have a question. A lot of us might serve on some nonprofit board or other.
My apologies.
Yeah, well, it's part of our service. So, and some of us might be on a budget committee or something like that. What if we find something? What do we do?
Well, the most important thing there is to have a policy that says what you do. There has to be a corporate go-to person who knows what to do with that. And that isn't always somebody within the corporation. As I think I mentioned earlier, it's almost better to have an outside person to go to. But I think in your situation where you've got reputations to worry about, you've got community relations to worry about, you should go talk to a lawyer and find out what they think should be the next step, because you're in a precarious position. When you're on a board of a nonprofit, I got to tell you, I know very few nonprofits in this state who have a board that is capable of detecting fraud. And I've worked with some pretty powerful boards. I mean, if you're a board member and you find something and you're not sure, especially the thing that I find the most is that you have financial people who can't seem to get you data on a timely basis. That's a red flag. That's a red flag, because within 15 days of the close of any month, if your CEO, a CFO, is not getting you financial data, that's a problem. But in your case, Theo, I would say you do need to talk to a lawyer. And in some cases, you may just have to step down from the board. Quietly, subtly. Maybe you trust somebody else on the board to talk to. So if there are a couple people who are interested in pursuing that, again, talk to the lawyer first. There are no reasons why you can't talk to your accountant for the organization, but it's going to have to be a confidential, truly confidential discussion. And in fact, the case I just talked about, I had a discussion with a CPA who did the audit, and the CPAs have a decision to make at any time they're doing business, and that is whether they want to keep a client or not. No, I'm serious. It is funny, but it's absolutely true. And I can mention CPA firms, but I won't. But there are some CPA firms that are more interested in keeping the job than they are in doing a good job. And I can't say I'm proud of that in my profession, but that's true. And some very apparently reputable organizations do that. It's like the CPA who did the GOP's audit, never even caught the $15,000 that was missing. So I wouldn't even go. I'm not sure I would any longer go to just my CPA. You have to go to a lawyer, and not the company's lawyer. Not the company's lawyer. And you know, I'd be glad to talk to you more about that specific.
It's a hypothetical question.
Yeah. Oh, okay, I won't go. So I hope I haven't made everybody totally paranoid. Any other questions? All right. So now you all know how to commit fraud. Oh, yes.
I do have one question. You mentioned having a lot of proof on a case. Dating back to 1999, is there a statute of limitations?
Fraud has no statute of limitations, just like murder. Yeah. And anyway, I try to avoid most of that thought because it really hurts professionally when something like that happens. And I can be honest with you, there have been a lot of audits, I won't say a lot, there have been some audits I've done where the results go nowhere. There was one when I was working with Pete Mitchell, we did an audit at a big organization, a nonprofit organization in the state. We found fraud, and that was it. There was nothing ever done about it. They just wanted to know that yes, it was or wasn't taking place, and so nothing was ever done. And that really, when you're doing that for a living, and you see that all this hard work that you put in, somewhat out of the goodness of your heart, certainly out of the goodness of the dollar. To see it go to waste like that is almost contrapuntal to the objective of your profession.